What do I have in my portfolio? There's 4 index funds. Realistically, I think someone could get away with 2, JPI and SCHG, but let's get into it and why I bought them. Before I do so, come to ZTRADEZ.net, check out the terms and conditions page, agree to our terms and conditions and disclaimer. If you do not agree to it, do not join the free Discord below and do not watch this video. Let's get into this. I mean, SOXX. People don't like volatility. I do, because then I can buy it really low and then it can rip really high, right? Just from 2022 to here, it's doubled. You know, from the COVID crash to here, it tripled. You've had 6 chances to buy it at near the 200 in 10 years, and you've had 2 chances in a decade to buy it below the 200, and I got it below the 200, and I'm happy. And we're probably going to go lower on the market later on in the year, later this summer. And we got Walk Away May coming in tomorrow, right? May is usually a bad month. Things are slowing down and they're looking sketchy again, and the hype's gone, and we got a little bit more of a gap to fill on SPY. I don't know if that's going to happen. But things aren't looking good right now. We're going to go down, and I think we're going to create a higher low. We'll see. We'll see. We are in Walk Away May. That's the short term. SOXX. What's the next bubble to come? We had marijuana in the 20 teens, 2016 through 2018. We had EV. We had solar during COVID and EV. Quantum was a quick bubble recently here at the beginning of the year on small caps. What other bubbles have we had, if I'm thinking? Anyways, the next bubble, we had space. That's obviously anything aerospace is just debt and no profit every time. It's an absolute, you just torch your money outside of SpaceX, because that's actually a business model where they're going to have internet to your phone. They're coming out with the Tesla phone. Anywhere in the world you can have reception and internet. Come on. That's amazing. That's different. Now, what was I going to say here? You're not going to have any of that. EV, robotics, AI. This is the brains for AI, semiconductors, right? This is the future. And it's not like it's a bubble. I mean, it's always ran. Sure, up here. Yeah, you can get away with it. Extremely overvalued. Yes. So why don't you wait till it drops, which I did. I don't do this time in's better than time out. No, it's not. You know, I could have invested it in 2021 and I'm red right now. You didn't do it right. It's real simple. And I'm going to go into investing theory that I've found out on my own. And it's basic logic. It's basic logic and it's math. So it's not just an opinion, it's math. We can prove if it works based on history. If I spike chase, look at that blow off top. We're running up, boom. If I spike chase, I mean, this is your morale as a new investor is just cooked. I save money after I buy. I save money. When there's a crash, I buy again. Then I save my money. When it drops, I buy again. No, I don't go into dividend stocks because they pay you like 2 to 3%, the companies that have a sustainable dividend outside of JPI, right? And then they're down. You know, it's not like they're up and then everything, and then when the whole market falls, everything goes. I save my money. I'm totally fine with doing that. It's getting eaten into inflation. Doesn't matter whenever I buy a dip like this. Okay, so it's getting eaten into inflation, so I'm going to buy it and be red for all these years. I ended up winning when I was in mostly cash. Again, I don't want to get off topic into investing theory, but I only buy crashes. And if you did that every time, look how this second you bought, within, you know, a month or so, a few months, you're green again. And, you know, it went red again. I could have bought again and then taken off out of there. Could have bought again. Like, look at this low versus this one, this low versus this one, this low versus this one, this low over here versus this one. I mean, you're never really red, and it definitely boosts morale for someone who's newer. You're not going to look at it, I suppose it doesn't matter, but it does matter mathematically, and it does affect how your net worth buying dips than chasing tops with FOMO. SOXX, solid add to my portfolio. Solid add. 10 years, what are we up? 1,100%. I think 1,062. I just wrote an article on this. Should be around 1,100%. 1,075% in 10 years. Amazing returns. I mean, that means that's like 100% return on average over 10. That's crazy. That's nuts. Maybe it was longer than that. I'll have to pull up I mean, that makes sense. $26 going back 10 years, and we're at 182. And up here, Now, it doesn't mean I'm going to get 100% in a year, but I could definitely clear in a healthy market, which everything's overvalued and everything's teetering. We've had a bunch of stuff dumped on us. Inflation hasn't been taken care of. Government spending has been atrocious on stuff that does not produce a positive ROI and help the people in the country and the economy move forward. Yeah, the AI chip bill, but that's another conversation as well. But I like this right near the 200. Fantastic. SOXX is going to be my hold over a crappy S&P 500 fund that's weighted down by 400 garbage companies. Really, the top 20 are the only things that really move the S&P. Those are the highest allocation anyways. SOXX, TOPT. I like this because it's dirt cheap. No, the performance isn't bad. It just came out in November, right? And it's not like, well, I didn't have enough history to invest in it. This is Meta. This is Apple, Microsoft, Amazon, Google, NVIDIA, Meta, Tesla, Visa, MasterCard, Chevron, Costco, top 20 of the S&P. Great companies. It just started in November. Why I like it so cheap is because I can load the boat on it. And when this thing in the future goes to $100, I can start selling cover calls on it. If it decides to split 5 years from now, then if it decides to split 5 years from now, then I'll end up, let's say I had 500 shares. If it did like a 10-to-1, that's a lot of shares I'd have. So we'll see. TOPT, either of these are good. SCHG is 25. They're both priced the same. Schwab's Growth ETF, fantastic ETF. Great, great, great fund. And it's $25. They split. This thing was in the 200s, I'm pretty sure, is where it was at. And they did a 10-to-1, I think. Yeah. So 10-to-1 split. So if you had 100 shares, you now have 1,000. And when this thing goes back up past 100, selling cover calls is going to pay out the rear end. SCHG or TOPT. One portfolio is SCHG, the other one's TOPT. That's TOPT is BlackRock's. This is iShares, which is owned by BlackRock. Their top 20 S&P ETF. So the top 20 stocks in the S&P. Either are fine. Doesn't really matter in my opinion because SCHG, the things that move it are the top 20 stocks. Let's take a look at this. So, one portfolio is one, one's the other. I'll stay in, we'll start off with SOXX in my 401k. We have TOPT, newer fund, but I understand what it is, so I know what its performance is going to be. SPMO. Oh my gosh. Do some research on this, guys. Amazing. Amazing. There is some overlapping. There's absolute overlapping here. So, but this, the whole reason I wouldn't have gotten TOPT because a lot of the stocks that are in there are in SOXX, not all, and a lot of the stocks that are in TOPT are in here, but they change. SPY Momentum ETF. This thing hardly sees red. It hardly sees red. Here it is in 2022. It really didn't drop too much. 66. We had a baseline of 55. That thing hardly fell. Versus, let's go to QQQ. We were at 404 with a baseline. That's a lot. That thing's like down 40%. It's ridiculous. Crazy drop. Not that it matters, and it's good if it drops a lot because then I can buy it lower, like I said earlier. But this SPY Momentum ETF, you're just hardly ever read on it. It's just like it's like anti-gravity. It's like gravity's inverse. It just wants to go up. Hence the term right here, momentum. Great ETF. And again, there's overlapping. The whole reason I got TOPT and I'm overlapping is due to the price. I'm going to stay in it for the long haul. I'm not selling. I'm going to be in that 10, 20 years. And I'm expecting it to split, right? If it splits multiple times, then, I'm going to have a lot of shares to sell cover calls on. So if it's looking like things are getting sketchy or it's around September, right? I can sell monthly cover calls there. February, usually things die off because we have such a boom in, sometimes October, November through January, and there's a sell-off in February. right? February, September, great times for me to sell cover calls. If we've had a violent explosion on the market, I can sell cover calls there as well. Whenever, let's say we got bearish divergence on the daily and things are screaming for a drop. If I run my TA and I'm sure of it, I could sell cover calls. That's the whole point. Other than that, I wouldn't overlap. I could pick any of these for a solid portfolio. JEPI, SOXX, even SPMO. JEPI, SOXX, and TOPT. JEPI, SOXX, SCHG. Could just do SCHG, and this is the final one, JEPI. JEPI. So depending on where you bought it, the lower it is, the higher the dividend yield is, cost per share for the price per share, the dividend versus the price per share for the underlying holdings. You do get dividends from the stocks, and then they're selling, and you're getting a yield from derivatives. You're getting dividends and a yield from derivatives, covered calls. No, they're not betting on direction. They're not buying calls. They're selling them. There's zero risk for those of you who sell cover calls. Those of you that know that, you're at risk of getting, this is managed well. You're at risk of getting the shares bought from you at a higher price than you bought them for. There's no general risk. I only buy dips. I called these dips down here. I called this one, and especially that one. That one, and I put my money where my mouth was, and I bought that one up. I'm sure it'll come down around its baseline 56 over here. If I'm getting it down here, at the price of basically $49.93 where it had its low, you're getting it at like near a 10% dividend, 9 to 10%. So it yields between 7 and 12. Amazing, fantastic. So this is paid out monthly, and it's hedged to the downside due to the fact that they sell cover calls. Now it also has an e-break to the upside because they're selling cover calls, so it only allows 10% out of the money. That's where the growth stops. It can only grow 10% that month. But overall, the fund is up since inception. And you can see over here in 2022, in July of 2020 when it came out, 49 to 63 is a large, decent pop. If you bought these dips, you're in a solid place, and I want it back up here, where baseline is 56. Even up in here, 59, 60 level. That would be great. And I have income. So this is a replacement of a bond. If you read these old school investing books, again, where they were in emerging market funds, when emerging markets were great to invest in, unlike now, then, they had bonds that were paying 5 to 8%, emerging markets that were ripping. That's all gone. Emerging markets aren't doing anything. They're at the same price that they were. I'm not going to confuse you guys pulling more stuff up. 15 years ago, bonds, they're paying right now, especially if you locked in treasuries, if you're in open market bonds that fluctuate with the yield, then where you're not locked in, like an let's say BND or BND, something like this. You have some appreciation when they cut some interest rates, but you're probably coming over to this range, and you're getting 3% on it. Not bad right now, but once rates go to where they peak out, because this runs inverse rates, then where, right? But I'm in JPI. That's the replacement of a bond fund, low volatility, just like a bond, higher yield, triple than a bond, any bond ETF. And that way I get a dividend yield. I get a yield to my portfolio, and I also get, which I can use those dividends to buy more of the stocks. I let it build up, and I can just put it on drip. I can buy more JPI itself to get a higher dividend, or I can roll it. Let's say the market crashed. I can use those dividends to buy up the dip. So SOXX, right? JPI. And SCHG, TOPT. Same thing as SCHG, right? And I have some, and that's just to sell cover calls in the future because it's cheap. There is overlapping, and that's not a good idea. SPMO, SPY Momentum ETF. And this changes. There's overlapping. My main portfolio, I cherry pick a lot of stocks. I'll go into what my favorite stock is, just period. And it's not what everyone expects. Oh, is it NVDA? No, it's not NVIDIA. Is it Tesla? No, it's not Tesla. No, it's not some small cap that apparently could be the next Amazon with a bunch of debt that isn't going to become the next Amazon. You're gambling. You might as well go to a casino. Yeah, a lot of people that gamble on these companies to compete with Amazon or Google, they end up getting torched. I'd rather just buy Google on a dip or Amazon on a dip, something that's solid that I know will go back up, that has a high probability, which is why I said that. So in general, if I were to give myself advice and I wasn't going to sell cover calls, I would tell myself this. One more time, SOXX, semiconductor ETF, returns are fantastic. JPI, great hedge. When things look sketchy in the market and let's say we're going into quantitative tightening, I could just roll everything into JPI, a lot of it, and get a higher yield and dividend throughout the turn down. SCHG. It could be that simple, right? 3 funds, SCHG, SOXX, JPI. That's what I would tell myself if I weren't to sell cover calls. Those 3 funds right there, fantastic. I want growth, right? People are very terrified of volatility, so they buy things that don't go up. It's like, well, what are you buying it for? Not to say the S&P doesn't go up, but why? Pick something has tremendous growth, in my opinion. This isn't financial advice. That has tremendous upside when there's a big dip. If you guys like this content, make sure to like and follow for more. I'm going to do another video on my favorite stock. I'm going to do another video on investing theory, my investing theory. If you guys would like to join the Discord, it's completely free to join in the description below.